Hey gang, we're going to do a little wrap up right now. I want to show you my concerns and I want to talk about what I'm seeing in the market and kind of give you a little bit of my afternoon broad strokes. As I expected, the US stock market in terms of the S&P 500, it's not doing anyone any favor. This is the third day that it's closing, or at least looks like it's going to close towards the downside. It's not looking strong. And again, volume is not picking up the way I expect it to. And again, we're comparing it to August, and it's not. This is telling us a lot of institutional traders are sitting on the sidelines right now, and that's telling us that we're going to have to become defensive, a little bit defensive. And I want to show you something interesting. This is stocks with new highs and new lows. Total of 4,471 stocks are looked at. 61 stocks are making new highs. Only 61 stocks are making new highs. The S&P 500 is literally like 2 points from, or like, let's see, it's right now at 310.52. All-time high is 312.52. We're talking like less than half of 1% off all-time highs. So the S&P is still extremely bullish. But when you look at 4,471 stocks, you'll notice that 136, that's more than double the ones making new highs. Double. Then, but you're probably saying to yourself, well, that's the broad market. Well, let me show you something else. New York Stock Exchange, 29 highs, 55 lows, almost double as much. NASDAQ, over double as much. Look at that. Almost double over double as much. Now look at the percentage of stocks trading above the 200-day moving average. And the 200-day moving average, as I've said many times, is a barometer of bulls versus bears. Only 54% of stocks. And if you look at last month, last week, yesterday, and today, this is the overall market, and this is why I keep telling you guys to look at market internals. If you were looking at the S&P 500 over the last 3 weeks or a month, you would say, wow, we're making new highs. We're in the biggest bull wave in history. Look at this. We're practically making new highs every day. The market is so bullish. But when you look at market momentum, if you look at these 4,471 stocks, you will see that we've been hovering, literally hovering around the 50th percentile. 51%, 55%, 55%. That's telling us that about 40 to 50% of stocks, all stocks, not just those 500 largest S&P, largest stocks in history, are sitting near a bear market. Because once this number drops below 50, bye-bye bull market. You're in a bear market. So if 49% of stocks are trading above the 200-day moving average, that's a bear market. So I'm not really interested in the S&P 500. And by the way, I'm not thinking that the market's going to crash or I'm just looking for a little pullback. And I'm going to tell you something, guys. Next week, I'm not done yet. I just wanted to kind of give you a little update. Next week, I'm going to have a live class. This live class is going to teach you how you can make up to tenfold without the S&P 500, without the correlation. Uncorrelated to the S&P 500. It's going to be brand new. It's going to be completely live. You really don't want to miss it. No correlation to this market. Zero. Make money from the market without having any correlation to the S&P 500. That's where you want to be. And that's what we'll talk next week. Just click the link below this video and learn all the details. But now let's get back to this video. So how do you trade this? Well, there is an asset called the VIX, ticker symbol VIIX. All right. And it really, all it does is it tracks this. And this is the volatility index. This tracks the volatility of the S&P 500 options. So when the S&P 500, let me show you, comes down to the 200-day line, when it comes down right here, let me show you. When it comes down right here, and that's where it's heading as far as I could tell, we can expect the VIX to spike to right about 20. So this may be a pretty good time to look at options on the VIX. So for example, there is a double leveraged VIX volatility index. It's very, very volatile, and it gives you good double leverage of the VIX. Ticker symbol is TVIX, okay? And you can buy options on it. And what I would be looking at, actually, no, there's no options for this one. I'm sorry. Here, the other one. And I would be looking at 117 expiration, or I would even go this far out. Now, there's hardly any liquidity here, but take a look. It's trading at 7. Look at this, $1.43, $1.50. If the volatility index spikes, this can turn potentially, if we see a little downturn in the stock market, these options could be going for about $6.60 to $8. That's a 6-7 times return. Not a 6-7 times. That's a 4 times return, 4 or 5 times return on your money. If volatility, if the VIX goes from the 12, 14 level to about the 20 level. We'll see that. So again, I'm not giving you a specific strike price. I'm just telling you what I'm looking at. I'm definitely looking at volatility right now. I'm looking at VIX options, and I'm looking for a spike because I'm expecting the S&P 500 to start cooling off just a little bit. And it's good for the market because right now market is fragmented. That means you have consumer discretionary lagging, you have technology leading, you have chip stocks going down. Markets are all over the place. And that's what happens when they get overbought or oversold. It's kind of like being pushed in different directions instead of all moving together. So volume will pick up once we have a mild correction. It's healthy for the market. We need to have a rhythm. The market has to have a rhythm. It should have highs and lows, highs and lows. And right now, with the market continuously going up as a result of the Fed lowering rates continuously, we haven't seen any of that. And that keeps that rubber band just getting stretched and stretched and stretched and stretched and stretched till it has nowhere to go. And hopefully, before it breaks, we'll see a nice little pullback. And again, next few weeks, you may want to stay away from the S&P. You may want to look at uncorrelated assets and assets that have no correlation to the S&P 500. That's what I'm really talking about. And again, don't miss that the live event next week. I'm going to be talking about how to trade uncorrelated assets, all live, brand new next week. Register below. Don't miss out. Folks, you've heard me talk about all the risks associated with large caps for days now. There's no news there. The Federal Reserve can no longer prop the market higher. The US-China trade deal, it's not likely to be resolved anytime soon. And of course, the markets, they remain stretched to the upside. There are problems with the market, but I want to give you a solution to trading it. It's happening next week in a live event, but you must click the link to register for it. I'm revealing a brand new strategy that exclusively trades the market's most explosive stocks. It's tailor-made for the market because these stocks have zero correlation to the broad market. You don't want to miss this, so make sure you reserve your seat for the event by clicking the link below. I truly believe what I'm going to show you could grow your account tenfold in the next 15 months. Sign up now.